Hey Kevin, this is for Monday, April 29. I didn't intend to start with wheat, is the last market I analyzed, but we're looking at it right now, so I might as well jump in there. Um, we have that 432 half long-term support level I know you know about. You can see it on the letter, and it is in reach this week, can contain selling through summer, and above which this 488 and three quarter level, which is the start of a range of resistance up to 499 and three quarter found on the weekly chart page 2 of the newsletter, is in reach over the next month or two. For the week itself, 458 even, dropping daily, can contain weekly buying pressures. We need to get up and over that, and then this 488 and three quarter to 99 and three quarter is a clear shot over the following several weeks. If so, 432 half still long-term support, July contract. We could buy that area down there. I don't have a problem with it. We also need to be equally willing to go short with a settlement below by 1% of 428 and a quarter or lower. That should maintain a pretty heavy dynamic for wheat as we continue into summer trade. I've got downside targets that I've mentioned in the newsletter. So 432 half still remains a real big area for this market long term. So, let's jump into stuff that we actually are involved in. Um, by the way, I don't know if you saw the email or not. I'm whenever I do this, I send out a big announcement. Going to do distant months because I'm finding, I could shoot just little videos and perhaps enhance revenue a bit that way by appealing to grain and cattle subscribers. But I've had all of about two responses since then. And one of them I actually sent you. Did you see that by Brad Werner? I'm giving you his name. I don't know if you know Brad or not, but he was a big lean hog spreader for years. I think he's done very well. He now teaches at Boulder for the last few years, trades on the side with a partner. Um, and so, anyway, he's all about the second and fourth month and third and fifth. I sent that to you out of just like, are you familiar with this? Does this make sense to you? Anyway, so let's take a look at the lean hog spreads. We got a nice rally, but it all came back for the most part. In this June August, this formation is at six. We'll just call that 630, and the low settlement is 637 half. So if we close, this is our support area, 630 to 637 half. And this still looks pretty good. It's just I didn't like the negative settlement after the big rally. So this closes 5.6. This is negative 5.5 basically. So if we can get above that today, I'd like it. Just negative 5.550. I'm just going to call that, round that around. You got a little thing here. I mean, there's little levels all the way up, but still, we're still looking for a channel structure up here that is in the -1 area, and then maybe in -1.2, whatever this formation would be. I do have that illustrated actually somewhere. Here it is. Yep. Here's a descending 1/3 speed line as well. That is a -3.825. This is an area we could consider taking profits if you wanted. I could be certainly talked into that. It's kind of getting into this old congestive area. Um, but really, this is that channel I was just telling you about. Actually at negative 1.3, sorry, 350. That is possible over the next few weeks. But let's not get ahead of ourselves, right? Anyway, so this -3825. If we saw this on Monday or Tuesday of this week, you could talk me into a liquidation in this area. If we get up and over that, now we're looking for another week or two up into this zone. All right, so that all true, holding above -6.30 to 375. If we close below 375, then phase two of an extended bear move in this spread continues down into the -11 area. So sell stop, I think, still at -6.60 is the way to do this. I don't think you've got good till canceled, but day by day for sure. So there's the same. Wait, no, this is October. The first was June This is October. My mind is drifting here with Brad Werner. He likes the second and fourth month combo. So that would be August, December, right? I'm going to try to create this chart right before your very eyes, and let's see what we get here. HES2 Q19. Boom. There it is. That is the lean hog. That is the lean hog second and fourth month out. Let's see what I get here. Not much really. I mean, this nothing. I mean, this is a resistance area, of course. It's probably consistent with this low at 13 and a quarter. That's 12.95. You know, negative 12 point. That would be. We'll just call this negative 13.0. And where do we go from here? Good question. There's not a lot to lean on other than a double channel extension, which is more of a target rather than a price level. And I'm just going to do an approximation right in this zone and see if doing a lot of umming here. Do some Fibonacci wave counts perhaps to see what we get. Not a lot. And then finally, I'm not going to spend a lot of time on this. Oh, look at that. Well, that would make sense. Double channel extension. You've got a full wave all the way down to 2.0. So this is realistically what we're probably looking at over the coming weeks, so long as we're holding below this. So this is an example of what Brad wants to see. I don't know if this is of interest to you or not, but anyway, so I digress. October still bearish below this point, which is negative, which is 7. Oh, Jesus, hold on. 7. Oh, that's the resistance for this market. And yeah, that's not correct because it's the same. This is basically the same chart. We're testing this 13.9 area again. 13.85, whatever you want to say. It's a trend line off these lows. And if we break it, we continue south. Otherwise, this is a base of support. And this is October Dees. There's that Aug Dees I just created. Here's the one we're in once again. Once again, August, October. We're below it. Bearish below it. Same one, August, October. 70732. So we'll keep watching this. $7.0325 for today. All right, that's lean hogs. Going to live cattle. I hope this video doesn't run obnoxiously long. It's already 8 minutes. We've only covered one market. All right. Sending 2/3 speed line on the live cattle June August spread. Okay, duh. This is what we're in. Wait. There's something incorrect here. June Aug. Why is this showing? Sorry, I'm getting all confused as to. Okay, there's some data issues here back here at these lows. I don't know why it's not updating, but there's something wrong with this chart. Let me go ahead and try to reopen this chart. That's really bizarre. I don't get this. Sorry about this. If we're looking at the June Aug spread, I'm just going to go to the newsletter itself, which is here. It'll take 17 hours to open, of course. All right, come on. Yeah, there's a low way back here that's not showing up on that chart right now. This is the data stream issue. I don't know what's going on here, but anyway, we're still expecting this 2.925 as a channel bottom. We're now below clearly, and so a resting bid at 1.950 is fine for me over the next couple of days, and it looks like we're going to hit it. So that's good. Do we go short again, breaking that? Probably, really, because we will have violated everything at that point in time. Let me see if any of this comes in. Ugh, no, it doesn't. Bear with me here. All right, so June, August, just screwed up. Let's talk October. Actually, we should go to August. I do need to get better organized. I'm going to say that now for the next 2 months until I do. So here's the August, October, negative 1.10 still basically. It did hold on Friday, roughly. You do have little things all the way down, which, I don't want to just make them 1.2 and blah, blah, blah. But I really think the critical sell signal would be closing below this formation, still at negative 1.100. And if we close below, we're looking for this. Until then, now that we've tested this, we can rally over the next couple of weeks into this, we'll just call it par for now. It'll be par by early May, okay, or even, as you might say. October DEIS, same situation here. We've still got negative 3475 as a rough resistance area. It's still expecting at least this, if not lower, on the October DEIS spread. Let me try creating a chart here. I can't get this 2-4 thing out of my head. So this would be GLES2 past August. So that would be Q19. Boom. So that's the AUG DEIS. I don't know. Is this of any value to you? Is this of any value? This doesn't make chop, 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 chop over that thing. But a spread is a spread. I guess my big question is, do people, obviously some people follow this. Do you or any of your colleagues follow this stuff? I really don't show a buy signal in this particular new spread I just created between August and DEIS unless we settle above this negative 4.100 area, which I guess I'll just mark down here. So there's that. I don't mean to digress too badly, but I do like the spreads. I don't know why exactly. They do line up technically. They're easier to sit with, kind of like an option, but there's no time decay. I think eventually if we start winning with them, we'll just increase the size or add to them as the position goes our way, kind of thing. This is DEIS Feb. We violated this channel bottom and we're continuing south. Where do we go? Anybody's guess. Let me do kind of a Fibonacci wave count here to see. All right. So I don't know why this doesn't, I don't know why this, I'm sorry to drag you into this. I have amended this. Okay. Set as defaults. All right. And apply. All right. That was my problem. I didn't set it as a default. So you got little Fibonacci's on the way down, but you've got a wave thing here from here to here to here, and the full wave was already here where we didn't spend any time. The second full wave is here. Anyway, so that's what we have. We're still bearish below negative 2.625 on this particular spread. And we've already talked about that. So I think that kind of covers, oh, here we go, Feb, April, way out there. Still holding this channel formation. That's what I like about the spreads. I don't know how many other people are watching this spread, but I mean that held nicely. That was our new ceiling. It held. What does that mean? Do we continue south? I think so, and not until we get above here do we actually continue north. I'm not going to update these numbers because they're roughly the same. All right. So lean hogs, live cattle. I'm doing some weekly gold and 30-year analysis that may become daily, and I'll start incorporating that into these files, into this video, if that happens. But until then, I won't really know until midweek. Spreads, corn. We're in this corn spread. And we did close higher. We still have good support at negative 21.6 long term on this channel structure. And we then have a buy signal, of course, as I've been mentioning. Where are you? above negative 18.3. So we want to see this spread get up and over that, and then I think we can just kind of sit with this thing for a while and not really worry about it, because the target should reach into this negative 10 area. Okay. And this channel structure, like I was saying last week, we didn't really get the opportunity, but it's still negative 34 even. This one is long term. I'm up for buying this. And you know, if I might zoom in on this just a little bit, because we did essentially test this. I'm going to say that's within 1%. Yeah, because 1% would be 3 full cents, right? And we got down within that for sure. No, that's 10%. I'm sorry. Let's just call it an essential test for the sake of this conversation. and and just look at when the next buy signal in this thing might be. We're kind of in it right now. We've got a high of a low of negative 30, and this chart structure is negative 30.1. So, you know, negative 30.1. I'm just going to put that. If we close above it, you know, on Monday, we can continue higher. You've got other little tests. Where does this come in? All right, so this could be the one to wait for, perhaps. I mean, you could wait all the way across, but this is the Dees year to year. I don't know, what would you call that? New crop, old crop, new crop, new crop, new crop, new crop. All right, so okay, that's it for corn. That's it for corn. Bean spreads. Let me take just a quick look at the July Nove, which is the lead one. So we tested this channel bottom last week, and it's at negative 21.2 right now. That's our down pivot. After having tested key resistance all across these lows that we did about a week and a half, 2 weeks ago, and a channel top here, negative 17.0, and that's negative 18.2. So I'm just going to go negative 18.2 to negative 17.0. That's our big ceiling below which this market can curl south, and we'd have a follow-through sell signal below negative 21.2 on July Nove. So I wouldn't mind getting involved in this if we close below it on Monday. And might as well cover the wheat while I'm down here, right? Okay, this is a channel top, negative 23.1 on Monday. And below which this big area is in reach. This remains kind of a bearish market. If I recall, we've got, you know, we've got some sell signals from before. Kind of screwed around in here for a day or two. But you've got intermediates as well right here that held perfectly. So we're in a sell signal mode. This channel top held, remains bearish below. That can get a little crazy. All right, so let's jump in. I'm going backwards here, I realize. Did not settle above 1301. This week is at, okay, it's at 1301 this week. I may have updated that. Oh, wait. That's an unupdated chart. There's a missing bar. This is what aggravates me sometimes about this service. Just right out of the blue, they decide to eliminate an entire bar for updating purposes or whatever. So if we close this week above 12, and we close at 1265, obviously, for the week, which is well below this area. It's down in here. So our ceiling is 1297, below which this market remains susceptible to continuing south to this channel formation, which is at 1092. All right, this is sugar. But as I'd mentioned, you know, closing above this formation is a buy signal, but holding below it, we remain weak. Let's move on to cocoa. Cocoa rallies. This is kind of a crazy schizo thing right now. I don't know what to make of it. I wouldn't be comfortable doing anything right now with this market. You know, you got a buy signal follow through that holds, and we break below it. Now we're back above it. I don't know. Anybody's guess. Coffee. or cotton, whichever you prefer. 77.04 is our down pivot this week. That is a Friday close below. Is bearish. This after having essentially tested significant resistance in the 78.97 to 80.30. 78.97 is really the meaningful area. I mean, it's a descending channel top, trend defining. You have former channel bottom, you've got another former long-term channel top. I think on the week itself, you could sell 78.97, allow slippage up to 79.78. But really, there's no question you're in the midst of a significant buy signal if we close above, 80.38. So still overall bearish below 70.97. And if we close below 77.04, I say let's look at some puts. Cotton puts. There's coffee. Let's take a look at coffee. What did coffee do? Well, it did close above this formation at 93.51. I'm going to open this up just a little bit. And this high is still 94.20, which we did not settle above. But this channel structure is 92.35 this week. And this is at 94.20. So, a bit of a mixed bag, but we did not settle. I've been talking about when they close above the high of the low week. And this is certainly the low week over the course of many years. So I think it's worth waiting Friday, but if we close above 94.20, the only problem, of course, is if we get a Banshee rally here this week up to 99.48, then what? But because we do have a bit of a buy signal by closing above this channel top. All right, so we could talk about that if you like. Let's continue on with the Canadian dollar, just to update ourselves. Canadian rally, close back above this channel formation. This is one little schizoid market. I don't really like it. we lost some money in it. That's one reason, but it just does not display at this point in time any trending desire. You know, we're likely to come up here this week. I could draw all kinds of fancy stuff, but the bottom line on the Canadian is we remain bearish. This is a daily chart, by the way, below the 76.60s, let's call it. That's longer term, but in the interim, we could. I'm just going to chart our next real buy signal in the Canadian. And that would be a settlement above 75.44. I'll round up 75.45. And that's good for a week, 2 or 3 into the 76.60s, which is this is the big 4-star area that we always are salivating over. And I don't know if we're going to get there or not, but this overall structure remains one of lower lows and lower highs since the 2017 high. British pound. It was close. We closed at 29.01, 29.87. So this channel structure, why isn't this showing up here? This channel structure is 2.2. 2.2 is at 30.13 this week. All right, 1.313. That's the channel itself. And then this low was 29.95. The low of the high was 30.64. This channel is 30.77. I could just amend this and say that right now we are weak below 13 to 77 in the BP. And this market can continue south, possibly testing this low area. So there's the British pound. Gold. Daily chart. We settled above this area. I think this this area is not out of the question now. 1320s, upper 1320s. You've got an ascending speed line this today at 1265.4. All right, that's our base of support. We came close to testing it a few days ago, and higher trade likely now. It appears. Do you buy it here? No. You buy it here. We sell it here. All right. I sometimes don't even want to bother with these unless you want to see silver and copper and all these on a continuum. Let me know. I think the 10-year is worth looking at. 10-year rallied. 10-year still looks good. 12, 122.20 to 122.11. I'm just going to call it 12. No, 11. 11 to 20 is a range of support. And this thing is stable to bullish through the second quarter above it. All right, so that pretty much covers all the extracurriculars. Let's go ahead and jump into, I'm just going to update you on the cattle. I'm going to cover August here. Come on. Still in sell signal mode, 110.50 likely. 108.02 is the equivalent of 110.35 on the weekly chart, which is an ascending 2/3 speed line off the same low on the weekly chart, which you can see page 2 of the June letter. So this area, 108.02 to 110.50, I know it's a wide range, but this is bottom picking territory right now. I don't know what your tea leaves are showing or what the whisperings are showing in your industry, but this is, I keep regretting not having seen this, but I don't know if it was even possible. This just sort of came out of nowhere. I think the lean hog weakness is just sort of the writing on the wall. Am I making that up? So anyway, 115.40 resistance. We're in the middle of no man's land. Nothing to do here, but this is our target, and this is a bottom picking zone I think worth pursuing if we get down there. Let me take a look at the lean hogs. We're almost a half an hour into this video as it is. We did settle below that formation on Friday, 90.05. And so we got little stair steps all the way down, but we are looking for 878.12 over the next 2 to 3 to 5 weeks. And in fact, the next couple of months could certainly yield this area here in the 72 and 73 handle. So we've got buy signal failure is now official with last Friday's settlement below this formation. If we close back above it, I actually don't have a problem in looking at going long lean hogs because it's kind of a classic sell signal rejection. And I do think 102.37 is in reach within several weeks of closing back above this formation. I don't think we take off immediately, but I do think it could just kind of grind its way back up. So there's that. Trying to think if there's anything worth. No, yeah, there's grains are worth speaking about, which I'll get to in just a second. Crude oil. I do think that there's a decent chance we'll test this area this week. And quite honestly, I think if we do, we've got a combination speed line and channel bottom on the daily continuation chart, which will not change with rollover. The new contract will assume this. So I think this is a good area, 58.64 to 59.33. If we get a chance to buy that, whether it's an out of the money call, I guess it would be a call at that point in time. You could buy a 60 call in this area, and I think it's worth pulling the trigger there. Not until we close below it does this show a bearish continuation. But right now it looks like we may be set to test it. And I'm going to jump into corn, July corn. Everything is adequately illustrated here. 347.5 becomes 348.5 on Wednesday. And that's our long-term support level. We actually dropped within 1% of all. That doesn't look like on this chart, does it? Doesn't look like we came within 1% of testing it. I wonder if I updated that chart. No, I didn't. It's showing up as 56.75. That needs to be changed because we got down to 51.25. Anyway, we did drop almost to within 1% Another tick south at 351 even would have been 1%. And so there's a case to be made that this was tested. We dropped into the zone, and the market can continue higher from here. If we close above 365 and 3/4, that would be an indication that we probably placed a good low through May, and then this significant area then becomes a 2 to 3 week objective. Corn. I'm going to jump right into soybeans and then be done with this. The soybeans are worth talking about. We are in a sell signal on soybeans. So we should be short right now, or people should be short. Traders should be short this market, below 874.5. And it looks like we'll get down to at least here over the next 3 to 5 weeks and possibly lower over the next 3 to 5 months perhaps. But we need to close below 23 1/4, 823 1/4 to really indicate 742 3/4 over the following 2 to 3 months. But that lower level, 823 1/4, is likely. On the other hand, if we close above 876 3/4, which is a significant speed line on the daily continuation chart, that would be a sell signal rejection. And I think it's clear enough then that we could comfortably go long. I don't know about comfortably, but we could go long. And I do think then 929 even, although not illustrated here, is likely within 5 to 8 weeks or less of closing back above 876 3/4. So that's really all I'm going to say. 31 minutes in. That's all I'm going to say for Monday, and I know we'll probably talk tomorrow. Thanks.